Hey guys, welcome to another Monday morning marketing update call. I love saying that. Steffani, Rozella over in Spokane, Washington. Hi guys, how's it going?
Good. How's it going?
It's great. So I'm not going to ask you who you voted for. You can tell us if you want, but the election was somewhat significant for economic activity. Yeah.
Yes, she's Canadian,
Rozella,
so
your
she
face
can't
is
vote.
worthwhile
I
for
just
that.
don't. I choose not to vote.
Oh, that's a
I
statement in
stay out of it.
itself, isn't it?
Yep.
Okay, we were talking off camera about the impact of the election. I have some thoughts and some data I can share with you. Any questions, any thoughts you have you want to start things out with?
Go ahead. Well, this whole year, basically, everyone's been waiting for the election and thinking that that's going to be a huge determining factor on rates. A lot of people are thinking if Trump did get elected, rates would go down really quick. Um, So now that our election results are in, we just want to do a brief recap on the changes that have happened since then, just so that because it didn't go quite with the prediction of like this huge, massive drop. Like there was, I don't know why people thought that that was going to happen, but they did. So we wanted to talk with you and hear your side from lending and how numbers look.
All right. Well, Trump got elected, as we know,
Yeah.
and the stock market rallied quite significantly after that. That's an indication that business think it's good that he's going to be the president. So stocks rallied. The 10-year T-bill, which is what mortgage rates are kind of correlated with. It's really, we go off mortgage-backed securities, which is slightly different, but they're still correlated. The 10-year T-bill actually, yield went up, which means rates went up with it. However, rates for mortgages didn't go up as much, I think, right after the election as what the T-bill indicated. They did kind of go up and they're kind of hanging in there. The overall reasoning for that is because Trump has said he's going to put a lot of tariffs in place. And it's not just China. It's like everybody in the north of the border, south of the border, we're going to create American jobs by putting tariffs on goods, making them more expensive. Well, that is considered inflationary because goods are more expensive. And so if we have more inflation, that means that bond traders expect more yield, and that means rates stay higher.
Yeah.
Now, an interesting tidbit on that, I was looking at some economic data. When Trump was last president, his administration did the tariffs with China at that time, and maybe some others that I'm not remembering. And that, believe it or not, was a period of time when it was not inflationary. Inflation actually was coming down during that period of time. But I don't know enough about it to tell you if those two are correlated at all, if there were some other things driving it more than the tariffs or what. But that's just a little history for you. So who really knows? I think the overall thought is tariffs drive prices up. That's inflationary. That'll keep rates higher. That's kind of where things are at.
Mm-hmm. In turn, though, with the tariffs, the flip side is we wouldn't be paying taxes, correct?
Well, tariffs
Or
are
what's the
just another
flip
form of
side for us
taxation,
consumers?
Rosella, is what the thought is.
That's
Just
what the
another
thought
tax.
was, correct?
Just another kind of tax. Yeah, it still drives the cost of goods up.
Right. So basically, yes, we wouldn't be paying those taxes, but we'd be paying it on the back end because those goods would now be costing more because of the tariffs.
Yeah, you just pay the tariff
Yeah.
cost, exactly. Like the people, the industries, the producers that ship goods in the United States, the importers, they just add the cost of the tariff on top of the good and
Mm-hmm.
they pass it along to the
Right.
consumer. Yeah.
Right. Would that discourage other people then to be bringing goods into the United States, do you think?
I think that that's a reasonable statement, yes, but they're still going to try to bring them in. I mean, we're the biggest consumer market in the world. China's coming close to us. They may even pass us by now, for all I know. China and the United States are clearly the biggest units, economic places to sell things in the world. So everybody wants to sell here, right? We're very affluent. We pay high prices for things, and we like stuff.
Oh, no. Yes,
Yeah,
we do.
yeah, we do. So.
Interesting. Well, I understand, I guess, the ideas and even the history of what had happened before to what people are hoping for again. But I think to think that we're going to go back to where we were is just
that's just not reality, like in any form of life. So I think the reality is like nobody really knows what's going to happen, but I think that we were already in a really tough spot to be in, economically speaking. And there's a lot of debt in our country. We know this as well. So I think that we're going to stay probably
true.
consistent, I would think, with those rates, because I don't think they can drive them up much higher. Otherwise, you're going to kind of really slow
Slow.
down the real estate market. And I don't think that that's helpful for the industry or the, country at all. And then in addition to that, they can't reduce it so much because we have too much debt to make up for. We're in a really bad spot financially. So, so to speak, but at the same time, it's still not manageable or impossible to buy. We know this. We are still selling, and people
Well,
are
life's
buying.
still happening and people are making it work and
Mhm.
they're becoming creative,
Yeah,
as are we.
I love it. I'm also seeing a lot of more people with side hustles right now. I will say that.
Oh, yeah. Entrepreneurship.
Ship.
I'm gonna finish that later. Entrepreneurship.
Yes.
That's what
Well,
America's all
as you
about,
know,
though.
we operate in Hawaii as well, and Hawaii is kind of a microcosm all itself with its own little economy over there. It's been high forever. Well, that's a little too long. Okay. Hawaii prices for real estate and consumer goods are much higher than the mainland.
Mhm.
I know that because I come over here a fair amount, right? Families here adapt. That's what you're saying. And what they do, a lot of them, is they get together and you have 2 to 3 family units buying a home together because that's the only way they're going to be able to afford to buy a home there. And
Totally.
people do what they got to do to buy a home.
Yep. Multi-generational is absolutely becoming a thing.
Yep.
Yeah, it is.
Not a
Absolutely.
bad idea.
No, little family compounds, not a bad idea at all.
It's been around for a long
Well,
time.
and as we know too, it doesn't always have to be family. It could be, a group of friends that want to band together as an investment. Like, so whether it's friends, family, whatever, I think people are just getting creative with how they're uniting themselves,
Yeah.
creating community.
Yeah, you need more resources, so you bring in other folks. That's exactly
And the
right.
good thing on the lending side, as we now know, that door was opened a while ago, that you don't have to actually be technically family or anything like that in order to co-borrow together.
No,
You can be friends.
there's no problem there. Absolutely. As long as you
Innocent.
qualify with joint income, joint assets, joint
Mhm.
liabilities, you can get a loan. Exactly right.
Yes.
Perfect. And John can help you.
Oh, yeah. Let me ask you one more question before we go, because
Okay.
the Fed is going to meet, and we'll have to do this as we move forward here, about 3 weeks from now. The Fed is going to meet. What are our predictions on what's going to happen with monetary? We've been talking what's called fiscal policy. That's what the government does and all of that. How about monetary policy with the Federal Reserve? Think rates are going to go up? Will they leave rates the same, change one way or the other?
I think they're gonna stay the same.
Yeah. I'm gonna go stay the same as well.
Okay, and so what are your reasons behind that?
We're in a checkmate, stalemate kind of.
What she said earlier with the rates and where they're at. Like, we have too much debt to go down. However, if we go up, it's gonna slow it too much. So I think they're gonna try to keep it at a healthy, earlier in the year you were talking about what is that landing they tried doing with
A
what was
soft
that graph?
landing. Yeah,
The soft landing. I think they're still in that soft spot. Like, they don't want to do anything too dramatic and cause disruption.
Yeah,
yeah, they don't want a recession, exactly right.
not yet.
I think you're both right. I'm gonna say they're gonna hold them steady. There's a lot of economic data between now and then, so we may change our minds. But right now, given the inflationary concern that we're feeling here, I think they're gonna keep rates the same. I don't think they're going to increase them, but I doubt there's gonna be a decrease.
All righty. Good job.
Darn it, but I guess we'll have to check back to see if we're all right.
Yeah, we will. And we'll have a couple more times to predict before then as well. So it'll be kind of fun.
Perfect.
Totally.
All righty,
All right,
John. Thank you
ladies.
for chatting.
It's been fun as always and interesting
Yes.
too. I appreciate it.
Thank you for the update. We
Mhm.
appreciate it.
We'll see you next week.
All right, guys. Have a good time. Bye-bye.
Bye.
Oh, good. That's fun. That's a good one. There's a lot of things that the YouTube algorithm will key on with that particular one.
Oh, I'm sure there's gonna be a lot.
Perfect. Perfect.
Absolutely.
Thank you. Hopefully
right,
it
guys.
actually
See you
records
later.
with your face on there since we can only see JM.
Well, I can see me and you, so hopefully we're both there for our audience.
Yeah, hopefully. If
All right,
not, I
bye,
know there's
ladies.
a few in the
See ya.
queue. Okay, goodbye.